My name is Dan Pavic with TASC. I've got about 20 plus years in experience working with fringe benefits and benefit planning and administration, 16 years of which have been with TASC. I represent accounting firms, basically serving as their back office for clients when they need various benefit plans. My specialty is definitely the health reimbursement arrangement. We'll be spending some time talking about that among some other benefits here this morning. So our objective is to identify and define 3 types of tax advantage health accounts, most of which you've probably been familiar with, but we're going to spend some time deep diving into the different types of HRAs, distinguishing between the different types and where they fit. And lastly, we'll summarize the compliance requirements that go along with these types of benefit arrangements. So just briefly covering some of our definitions from today. First, we'll be talking about the FSA, or flexible spending accounts. Secondly, the HSA and health reimbursement arrangement. HSA is everybody's familiar with, health savings accounts. We'll be discussing SPDs in our compliance section, which is summary plan description. Consumer-directed health plans, high deductible health plans will be some common acronyms, along with PCORI, which again we'll finish up with in our compliance section, which is the Patient-Centered Outcomes Research Institute. IRS reporting. Single employee plans are exempt. And as we talked about, single employee plans have 0 impact on marketplace eligibility. Some HRAs, such as the QSE HRA, require box 12 code FF reporting for the amount offered, not the amount used. So again, the QSERA is the only one that actually requires W-2 reporting, and the HRA does not require W-2 reporting, but does require 1095B and Form 5500. So W-2 is not required reporting on anything but the QSE HRA. Any employer that offers an HRA to multiple employees is required to do PCORI compliance. PCORI is the Patient-Centered Outcomes Research Institute. There is a fee of $3.22 per covered life, and it's reported with Form 720 by July 31st of the following plan year. So what does that mean? If you offer an HRA, defined contribution, QSERA, or otherwise, and you offer it 2024, you've got more than 1 employees covered, you will be subject to that PCORI reporting, which would be offered or done by the end of July of 2025 for the 2024 plan year. Currently, PCORI has been extended to 2029, and then it'll be up for debate as to whether they're going to continue that or not. And what I'm going to finish up with here is just a thank you. Thanks for having me on today, along with just my email and my contact information. So if any of you have follow-up questions, or you'd like to ask specific client questions, or maybe you've got questions on your own tax firm, feel free to use my Calendly link. This is definitely a busy time of year for us, so you might be a couple days out before you have that consult, but certainly keep my contact information if there are any future questions.